Hello everyone, my name is Matthew Frailey with BreakpointTrades.com. We've been bringing you advanced technical analysis, market commentary, trade ideas, and mechanical trading algorithms like you see here with our SPY system. And now we're actually giving systems trades for our ES systems. We've been doing this since 2003 for individual traders and professionals, including some major institutions which I consult with on a weekly basis. It's been a little while since I did an update. The last video I did with you or for you was with Mike Swanson, where we discussed the market being in a bear market and we discussed commodities. I've been meaning to make a new video about that, but what I decided to do is record tonight's newsletter to our subscribers. That's what you see here on our back end. This is our back end recording, and so we'll go through this and go over everything that I see, and I will do some other videos this week. I am dealing with a major issue with my basement. Had a major flood on Sunday night. Had to tear everything up. Very, very annoying, as some of you may know have been through that. So let's get this newsletter here started on the back end. Hello everyone, this is Matthew Frailey with BreakpointTrades.com. This is the Tuesday, March 8th newsletter. Tonight's newsletter, as you can see, the table of contents is divided into 5 major sections. Same general theme as I always keep, where we discuss the general markets, look at a few indicators, bonds, TLT, high yield corporate. We'll also look at the yield curve, which continues to tighten, getting close to going inverted. We'll look at major sectors, dollar, various commodities, precious metals, which have been on fire. My commodity call back in December and January has proven outstanding. And the precious metals have joined the commodity party, as we have seen. We'll look at trade ideas, but quite honestly, we've not been offering many new trade idea setups in this environment, in this volatility. When you have 80 and 100 point S&P swings during the day, there's really no reason to. Today, for example, we saw the S&P down in the morning. Then by late morning, the S&P staged an 80-point rally. Par for the course these days in this volatility. Sharp rally. I actually caught that. Then it gave it all back. And by the way, today the VIX closed back inside its Bollinger Band. So that's a potential VIX Bollinger Band buy signal. So we could potentially see some potential market bounce from here. I'll discuss these scenarios below. So let's go ahead and get started with the rest of the newsletter here. So the first thing I'm going to discuss is our systems, or reversion to mean systems. And this is kind of a large image here. I didn't actually make this, size this really properly for YouTube, but I'll just go ahead and zoom in here, out here. And none of the SPY reversion to mean long systems have triggered yet. They've done some really good trades this year in this volatility. The SPY systems and the ES systems are composed of 40 individual systems, algorithms. This gives many trade opportunities on the market, both long and short. Anyway, the systems all caught nice long trades there in early January, late January, and in mid-February. And they've been in cash at this point. Okay, you can see the SPY system here. The QE 3.2 did a long trade in late February. Nice little winning trade. You can see there's 12 systems here, long systems for SPY. Nothing's went long again yet, but should the market go to new lows, which we do think it's still going to make one more low, it may bounce here in the short term, which I'll discuss below. Be prepared, because some of these systems will probably start going long. Okay. Next. Image number 3. This shows you the individual long subsystems for our ES systems, which I'm now sharing trade signals for our website. Okay. Why do I do both ES and SPY? Even though they're essentially, they're not exactly the same instrument, but obviously they're 98, 99% correlated. ES trades overnight, obviously. I run the same subsystems on both instruments, but they will give slightly different trades. Sometimes the systems on ES will catch trades that the SPY misses, and other times the systems will catch trades on SPY that they miss on ES. So by doing both, we get all these opportunities, and it kind of all averages out in a better way, I think. But all the ES systems here, you can see nice trades there in late February. They bought that nice dip there in late February. They caught trades in January, and they're in cash too as well. But if we do get a new low on the market, we're likely to see some of these systems go long, and I'll send out trade notifications to all our subscribers when that happens. Most of these systems have 90% or greater winning trades. Okay, these are very popular with our subscribers because we tell you when to enter, we tell you when to exit, and again, they're based on statistics and have about 90% winning trades with high profit factors. Next. So the last thing I want to cover here, and I had a question today from one of our subscribers. He said, "Why haven't your systems taken a short?" Okay, and it's true. The current systems that I use to capture shorts did not take a recent bounce trade that we had, this lower high from last week. Okay, the current ones I'm using. What I'm showing here in this example, this is the QE Swing 3 short subsystem. Okay, I have two different versions here. So the version we've been using on the website here at the bottom, it did not take a trade. Here's some of the trades in the past. This is 2018-19. You can see the short trades. And here's one of the versions, multiple versions I have of this system. And you can see this version would have taken a nice short last week. Would have been nice to catch that short clearly, but that's not the one we have active on the website. This is just all these subsystems. I have multiple versions that I had to decide from. The reason why I didn't choose this particular version at the time was, if you look at the past here, you can see it had a bad trade in here that I didn't like, that this version that we're using does have. You know, they caught essentially the same trade here. This one short a little bit early. This one caught us, basically a wash trade here. The system here has better stats. It has about 87% winning trades versus this one apparently has about 81% winning trades. This one has a higher profit factor. This one has a lower profit factor. Okay, so anyway, that's just a nuance of the systems, But again, being a volatile year, and most likely that we're in a bear market, the systems do much better in volatility. So I'm expecting pretty good things for these systems this year. And all the previous bear markets or sideways markets, the systems have had really good years. Okay. All right. So that does it for that. Let's go ahead and move on to the general market newsletter. So item number 5 here shows the index sector table, what transpired today and this week. So for the week, major indexes are still strongly down, anywhere from 1.7 to over 4% for the NASDAQ 100. Today was a bifurcation day. The Dow, Wilshire, and Russell small caps were up, while the S&P and NASDAQ were down. Again, there was huge intraday swings. The S&P had that 80-point rally, only to give it back. Okay, so the intraday volatility is masked from just looking at the daily percent gain here. And of course, yesterday we had that 120-point sell-off in the S&P, 700-point sell-off in the Dow. Here's the major sectors today. Most of them were down out of the 20 sectors we follow, except for energy, obviously, with the move in crude, and home builders, retail, consumer discretionary. For the week, of course, massive losses here except for the energy area. The energy area is getting overheated, so be aware. There's no real good objective long setups here. They're just momentum. The real setups for energy were back in late December, January, and that pullback in February. I showed a bullish symmetry break way back in December, and our call on the energy area has been fantastic. But it's getting a bit extended, obviously. Currencies, US dollar, up for the week, about 0.5% down today. Cryptocurrencies are holding up here okay today, at least. They're kind of mixed for the week. Commodities, as you can see, general CR, the index up about 1.63%, 3.85% for the week. Crude oil up yet another 3.6%, up over 120 bucks. You know, obviously, you know, Ukraine situation. But again, guys, even before Ukraine, and don't let the current administration in the White House tell you that all this inflation and everything else is being caused by Ukraine. Obviously, short term, we're getting spikes in it. But, you know, the commodities were already in a bull market and already uptrending. Had we not had Ukraine, I still think we would have seen crude oil well into the $100 range this year. I was targeting at least 150 myself without that. So, you know, all these commodities were in a bull market. We've had inflation well before the Ukraine stuff. So don't let the current administration deflect and try to convince you that it's all come from Ukraine suddenly. No, it was all in place before. This is just exasperating things. Natural gas down 6.3% today. Most of the ag slightly up except for wheat. And precious metals all have had huge days. Look at these moves in precious metals. Warning short term though, GDX down 0.25% today. They tend to lead, so that may be foretelling of a pullback consolidation here soon. You can see the movement of bonds today slightly down, with TLT down 1%. Next, item number 6 shows the economic news calendar. The big one, I think, guys, is on Thursday. CPI numbers. Remember how hot they were last time. Mark the economy. Everyone on the street is not just the stock market, but you ask anyone and you're at the store, they're all concerned about inflation. So this is going to be heavily looked at, guys. Be aware. Next. Gonna pause this for a second, guys. Something got out of order here. Give me a minute. Okay, so everything is back in order, guys. Sorry about that. So starting with the index charts, this is the daily view of the 5 key major indexes. Again, you can see this downtrend we've had since January. Again, our view is that we're in some sort of bear market, and we formed a decent low in late January, one in late February. Now the market's been declining again. You can see the action this week and from last week. All right, let's go ahead and move on and look at the S&P 500 specifically. The S&P 500 is our proxy, so this is the daily view of the S&P. Steve started showing this on the weekend. So this is our primary view right now, some sort of leading diagonal here. And we're still targeting ultimately one more low down here. And we think that that could put in a better tradable low. You know, we had a trade low back in January 24th and one in late February, but these were fairly short. We think that once we put in a trade low over here, that the market will then be set up for a longer bounce attempt, maybe one lasting into late April, May sometime. And so that's still our primary target. You can see big move down from late last week. Recent lows are right here. So we're targeting maybe slight undercut of this. There's an open gap below, which we'll show next. So chart number 9, here's the zoomed out view of the daily S&P chart. So you can see this open gap way back in April of 2021. What you'll learn on the cash indexes, these open gaps like to fill over time. And this has been a magnet. So this could be this is one of our main targets. We'll see if we achieve that. Again, given the volatility, you know, the S&P was down over 120 points on Monday. So you could have 1.5 days and you could be right down into there. So, you know, that's really not that far away given the volatility. Okay. Here's your moving average ribbon. You can see how it's been a great guide. Every time it's squeezed on the underside here, we're good short opportunities. Next. Chart number 10, here's the cycles. So here's the daily. One thing I've noticed lately is the market has been reacting on these DeMark 9 cycles. So if you don't know what DeMark is, take a look at it, but it's a sequence. 9 and 13 are the important ones. So you can see back in late January, we had a DeMark 9. That's where we had a trade low. And we had a DeMark 9 in late February. We had a little temporary trade low there and a bounce attempt. So far, the daily ATR has been resistance. and we're moving down again. Moving average ribbons here have been a good guide. Went bearishly stacked back here. When they get too wide like this, you're due for a bounce attempt, which we got here and here. Here's the half day, the 195 minute. We had a DeMark 9 here at that low. Now we do have a cycle buy here. If you look, the last time we had a cycle sell, the market pulled exactly back from it. So right now we have a cycle buy, and I'm actually looking for a potential bounce here, possibly tomorrow on Wednesday, right from here. Here's the 120 minute, and here's the 60 minute. You can see the ATR has been resistant. You can see we had a DeMark 9 here at this low where we bounced from, and a DeMark 9 down here, and a DeMark high right here. So lately, these DeMark 9s have been important places for the market to respond to. Next. Chart 11, here's the 2-hour time frame of the S&P that we've been using for mapping. First off, we had this slanted head and shoulder pattern back here in December, which played out beautifully. We rallied, formed a lower high. By the way, you can see your moving average ribbons. Very useful whenever they pinch. It was pinching on the underside here, was a great short. It was pinching on the underside here last week. That was a great short opportunity. So what we've been monitoring is this leading diagonal, which I showed you on the daily. All right. And it's been following us very well. Those of you who have been following us on our subscribers know that we've done a pretty good job with this projection. So right now what we're watching for is potential bounce here, a wave B, and then maybe one more decline in a C. Okay. Next. Chart 12, here's a 60-minute view. Here's a little support temporarily. Next. Chart 13, here's a 10-minute view of the S&P. So this is what we're monitoring here short term, is this potential ABC where we've had an A, B, we get a rally up in a C. This, by the way, would be a short opportunity, and then we get that decline. You can see we had a symmetry break here. This rally here, at least with respect to the high here back on March 3rd from last week, was a break in symmetry. So we could form a higher low here, then get that little wave C up, possibly tomorrow. Next. Chart 14, here's a 15-minute view of the S&P. This one focuses on the symmetry. You can see the relative to this high. So we had a measuring this rally and this one, roughly symmetrical. We had a symmetry break here today. We stalled right here at resistance. Lately on the market as well, it's best to short resistance by supports. This was a good short up here, and we're pulling back here. So I'm looking for possible higher low, rally up, and then we get a good short opportunity. We'll see if we're correct on that. And finally, chart 15, there's a 5-minute view showing the action. Yesterday was an absolute drubbing on the S&P, down 120 points. We broke symmetry here in the morning. That told you to be on the lookout for a higher low or double bottom, which we got right here. And then we hit an 80-point rally intraday, so you could have got a nice long opportunity here and a short. Next. Chart number 16, here's the triple Qs. Nothing's really changed. We're also monitoring this potential leading diagonal here as well. Next. Chart number 17, here's the cycles. Very similar to the S&P. So like I said, market's been responding to these DeMark 9s lately. The cycle here on the half day, we had a sell cycle last week, which has worked out. And now we have a buy cycle where price is trying to bounce from a little bit. You can see here at the lower time frames, half day or 120 minute and 60 minute, had a DeMark 13 and a DeMark 9 here and here. Next. Chart number 18, here's a 2-hour time frame. You can see the December highs. This long downtrend line is your clear long-term resistance. We're a ways from that. This chart still doesn't look very pretty, obviously. It's strongly downtrending. It could easily go down and make a new low. But we'll see if we get a rally attempt short term. Again, I think that'll be another short opportunity. You can see you're moving average ribbons. When they get too wide like this, you're due for these reversals, bounce attempts. And it is a little bit wide here. Next. Chart number 19, here's a 15-minute chart of the S&P, or the triple Qs. So you can see we had that symmetry break just like on the S&P, potential little ABC. Now we'll see if we can get that bounce attempt tomorrow. Next. Chart number 20, IWM small caps. Nothing really new here. We had that double bottom last week. Rallied up. We stalled this resistance zone. Here's your main downtrend line. Even average ribbons are obviously bearishly stacked. You can see here where they were pinched. That was a hell of a shorting opportunity there in late December. Next. Chart number 21. Here's another way to look at this, is a possible diamond on IWM. You can see this almost perfect diamond. Next. Chart number 22. Here's a 2-hour time frame. Shows you how it's been trading in this range. Buy support, sell resistance. Right now we're in the middle of it essentially. So your low risk trades are here and here. Right here, not so much. That does it for the major indexes. Let's move on and look at a couple indicators. Chart number 23, here's the VIX. So the VIX, one short-term positive for the market. The VIX was closed outside its Bollinger Bands yesterday, closed back inside today here. It's obviously still very elevated. It's at 35. That's where we're having 100-point range days on the S&P. But it did close back inside, and, you know, that can produce some pretty nice bounce attempts. So we'll see if we get a bounce attempt from here in the short term. Next. On a side note, this chart of the NASDAQ with the breadth indicators here, the new 52-week highs, the new 52-week lows, and more importantly, the difference, the 52-week highs minus the 52-week lows. This has been outstanding. As you know, I discussed this back in December. I said the fact that the difference was negative, this occurred in previous bear markets, and unless it went back positive, it likely would signal we're in a bear market. And lo and behold, this has played out. We talked about this in December. It's never went back positive, the difference here. See that? So if you take this chart back to 2008, that's exactly what happened. It stayed negative almost the entire 2008. Now, short term, what I'm watching for is, well, if we do get on the next big sell-off in the market, if we get a spike here below those Bollinger Bands, that could be a signal, an oversold bounce bottom. So keep an eye on that. Next. Looking at the yield curve here, the yield curve continues to tighten. Remember, that's the 10-year divided by the 2-year. Under 1 is inverted, and look how far this puppy has fallen. Back in late 2021, or early 2021, I'm sorry, it was 13.22 the ratio. It's now fallen to 114. It is very close to going inverted. We should make a poll, kind of like the Price is Right. Whoever guesses closest to the right date that this goes inverted wins. It wins a free membership, whatever. But I do believe it is destined to go inverted here. We all know the economy's been slowing, the inflation, the Fed is boxed, and you know what? Putin's boxed himself in too. So who's more boxed in, Fed or Putin? Regardless, I think everything is set up for this to go inverted and for the economy to have a recession in the future. Next. Chart number 26, high yield corporate. So stalled at this resistance zone. It's now back testing this area down here. Watch for, though, a potential double bottom here, maybe. Next. Chart number 27, TLT. Not much to say. Down about 1% today. Lower high last week at the 50-day moving average. Next. Chart number 28. This is a look at the major sectors. Again, not going to go over a bunch of individual sectors here. One thing to note, the financials are quite extended. XLF, that's the energy up here, XLE. Financials, XLF, it's been below its lower Bollinger Bands 2 days in a row. It's getting a bit oversold. And XLP had a big move down below its Bollinger Bands. Next. Chart number 29, XLE Energy, up and away. Black candle doji today, be aware. It's been riding above its upper Bollinger Bands for a while. There is no objective long setups here, guys. Just manage your profits, scale out, whatever. The objective buy entry was back here in late December on the Symmetry break. and on the pullback here in January to the 20-day moving average, and on the perfect symmetry pullback here in mid-February. That was your buy opportunities. You do not have an objective long entry here. All right. That will occur on the next major consolidation. Great example of the moving average ribbon here. You can see how tightly wound it was. When it's tightly wound like this, that's when you get these big moves like we've seen. Okay. Right now, we're very overbought. Look at these RSI readings. Next. Chart 30, oil services have just been powered up. They've had a little delayed effect. They're too getting a bit extended, obviously. But big move out of this area. You can see this bullish diamond played out beautifully back here. Next. Chart 31, CVX, one of my long ideas in the energy area. Look at this sucker. Big breakaway gap. You could form an island top if it were to form a doji up here, but one hell of a move here the last few months. Boy. Next. Chart 32, XBI Biotech. Here's the Biotech ETF. I'm monitoring this for a potential long. We have a falling wedge here, MACD divergence setting up. So just need a trigger. If you can get over this area, you could go long with a tight stop. Okay. Next. Chart 33, LABU. That's the leveraged way to play it. Over this trend line could be a trigger with a tight stop. Next. Chart 34, here's the 60-minute or 2-hour chart. Here's that same trend line you could use a possible trigger. Next. Chart 35, XRT retail. Downtrending. You can see every single rally has stalled at Symmetry. So the Symmetry is something to monitor on a future rally, but that's your main downtrend. Resistance. Next. Moving into commodities, here's the CRB S&P ratio. I talked about this back in 2020. I talked about it in 2021, how commodities have been underperforming the S&P since 2011. It was forming this multi-year rounded bottoming pattern. And I did an interview with Mike Swanson on this a couple weeks, 2 or 3 weeks ago, and look how this ratio is exploding out of this rounded bottom. Look at your moving average ribbon. It is now starting to expand up. They are getting short-term extended, but the point is, this is a monthly chart, guys. This could be setting the stage for a multi-year run. Okay, so if they top out here in a week or so, when the market bottoms, I believe it's going to go through a consolidation phase of a couple months. But by all means, the long-term trend looks higher for commodities. Next. Chart 37, here's gold versus the S&P. I showed this ratio a month ago. I showed a 5-wave completed down move with a positive divergence. You can see your moving average ribbon's been bearishly stacked all those years. It flipped positive. And as you know, gold has been joining the commodity party lately. Gold was lagging the other commodities, but it has really joined in a big way recently. Next. Chart 38, DBC, commodity ETF, continues ever up, but we are watching for a potential exhaustion up here in the short term. It has had a hell of a run. Eventually this will be due for a consolidation phase, guys. I think it's going to be timed when the market puts in some sort of trade low, and commodities will be due for a, maybe a 2-month consolidation. Next. Chart 39, here's the weekly view of the DBC again. We're watching for a potential blow-off top up here. But again, guys, don't get me wrong. That won't end the commodity bull market. It'll just be set for a decent consolidation. And I'll be looking to buy that consolidation. But be careful about buying it too early. It may need a couple months at least to work that off. Next. Chart 40, crude oil, up and away. You can see the bullish diamond is played out beautifully. Obvious, Ukraine news, etc. Obviously getting a little bit extended here in the short term. But longer term, I would not be surprised to see crude oil at $150, maybe even $200. Next. Chart 40, natural gas. We're monitoring this large coil action for now. Right now, we're in the middle of it. Next. Chart 42, copper. Had a pretty big move last week, pulling back. This is an area to watch to see if it finds some support. Next. Chart 43, DBA, pulled back today but found support at the 9 EMA short term. Next, chart 44, wheat. As you know, wheat's been on a tear. Palladium's also been on a tear. I don't have that in tonight's newsletter. Pulling back today some, though. Next, chart 45, sugar. This had also had a good move, another commodity, but pulling back a little bit today. Next, chart 46, Bitcoin. In this large coil so far, trying to form a little higher low here. Keep an eye on the cryptos. They've been leading the market. Next, chart 47, Ethereum. Forming some sort of coil at this point. Next, chart 48, US dollar ETF continues to be very strong. You know, the dollar we said looked bullish back last year, and it's worked its way higher. But the dollar being up here has not hurt gold. In fact, they've both moved together. This is the next resistance zone for UUP, right up in here. These are these lows back in 2020. You can see your moving average ribbon's been bullishly stacked. It is getting a bit extended here, a bit wide right now, though. Next, moving to gold. Here's daily chart of gold. It's broken out of this coil pattern beautifully. Look at this super move from that coil. Hit it 2080 at one point today. So hell of a move. Commodities, gold has definitely joined the commodity party. Remember, I did a YouTube video on that over a month ago. Next, chart 50, gold on the weekly. This is one of my favorite weekly charts. I showed this chart about a month ago. I did a video on it. It had a beautiful coil. You had a coil on the GDX-GLD ratio. You had the moving average ribbons compressed. That's where you get your big moves from, like back here. You see where they're compressed? 2019, then it resulted in that big move. You had a compression and coiling in the RSI indicators. Everything was set up here, and it's moved beautifully. Okay, this is your 2020 highs. That would be a logical area to maybe pull back from, but I believe it'll be a bullish consolidation like a cup and handle, and then we'll rally up. And I think we'll see the mid-2000s in gold this year. Next, chart 51, there's the monthly view of gold, this large cup and handle I've been showing. So I wanted to show this a little more detail. So this cup and handle, you can see that clearly. But the symmetry targets, I'm measuring the move from here to here and from here to here. That's where I'm getting these two symmetry targets. So 2315, measuring from essentially this low, or 2600. So I think we'll see these levels later this year. Next, chart 52, GVZ, that's the volatility index for gold, kind of like the VIX for the S&P. It's been running like crazy well outside its Bollinger Bands. When this closes back inside its Bollinger Bands, that might be the time gold finally goes through a correction. Next, chart 53, silver, also has had a nice move out of this coil. Nice move off that double bottom. Next, chart 54, GDX, gold stocks in the daily. Black candle today, well off those highs. To me, it looks extended. It may be area for a consolidation finally. Okay, you can see the stocks underperformed today on the ratio. Next, some of the individual stocks. I'm not going to go through all these guys. Remember, I had a good handful of long ideas in the precious metals. They've all given nice trades like GLD. Look at this nice move from this coil. Moving average ribbon's now very extended here, though. Be careful. Next, chart 56, Newmont. Beautiful move here recently, but ugly candle today. Next, chart 57, WPM. Also nice move recently. Way off the highest today. Next, chart 58, AGI, silver stock. So again, nice moves in these over the last month. I hope you caught some of them. And longer term, I believe gold is in a bull market. So, you know, long-term consolidations are buy opportunities. Next, moving on to the trade ideas. Again, I'm not going to cover much here, guys, because of the volatility. Archon was a long idea of mine last week. It triggered on Friday. Had a big follow through yesterday. Steve didn't cover it. And it was up today. So from a percentage point, if you bought it at $1 down here, it ran up to $1.60. 60% move. But if you didn't take profits, it gave a ton back today. In this market, you got to take some damn profits. Next. Charber 60 Zoom was a short of mine back in February off this coil. It's played out beautifully. It continues to work lower. Trail your stops down if you're still in it. Next. Charber 61 DraftKings was a nice short here at the 50-day moving average, obviously. Next. Charber 62 ZTE was a nice short from this tight coil from early last week. Next. Charber 63 AMD. Steve talked about this potential fifth wave that could eventually unfold down here. Remember, if we're in a bear market, a lot of these stocks are going to underperform. AMD's had a hell of a correction from the highs here. I think it would be a good buy opportunity down here, though, for a decent, 2 or 3 month trade. Next. Charber 64, Facebook, Face Crook. This is our long-term projection for the fifth wave high back here in 2021. Maybe bounce in here sometime soon, form a lower high overall in the bear market, and then work its way lower into 2023. We'll see. That's a possibility. Next, Charber 65, ESPR. This is a long idea last week. Basing pattern is still valid here, so I just put it back in a newsletter. Remember, my other idea is XBI Biotech and that falling wedge. All right, and of course, if you're able to monitor the market, you have huge intraday swings to do ETFs or futures. All right. Anyway, guys, we'll see what happens tomorrow. Have a good evening and take care.